Good morning, everyone, and welcome to your Daily Five. I'm Leslie Jouflas, and I've got 10 minutes today to present five charts. And I thought today I'm going to go over and review the results and follow up on my last show that I did on Daily Five from February 17th. I really try hard to present charts that are in the process of developing a pattern and try and explain that. But a lot of times you don't get to see what happens with those. So I thought it'd be a good thing today to do that and follow up. So I'm going to start with the S&P chart that I presented on February 17th on your daily five, and you can go back and look that segment up. But at the time, the S&P was approaching the big round number of 4,000. So if we look over here on the left-hand side, that was the chart that was presented February 17th. And I had presented the retracement of a potential of where the price could do a correction to. And you'll notice here that there's some dashed green lines. Well, the markets tend to do repetitive types of moves, which is what forms the type of patterns that I use for trading. And the Fibonacci retracement from the low here up to the high, the 0.618, you can see was just at the low of that dashed green line. So over on the left-hand side from September, October, you can see real similar movements of the correction there to the October and of November corrections. Those are very similar as the market moved to the upside. All of those little corrections were very, very similar in size. So you can see that repetition happening. So now if we look on the right-hand side, you can see on the dashed green line on the right that the market, when it came and it just dipped to that 3,800, and the futures, it dipped just a bit below it. It was right on to that 0.618, the same length as the green dashed line. So there's a really nice example of that playing out in the markets. So let's move on now and go to the next chart. And Amazon, this is another chart that I've been watching, and it's been in this triangle range for quite some time now. Actually, started way back last summer and has just been trading, down and up, and you can see within these trend lines. So you may have to, I put in the pink dash lines, and that's just showing when there's a breakout, what these potential targets may be on the upside and the downside. Now, it has these prices over here on the left, but you would have to recalculate them based on where an actual breakout should be. So Amazon, this chart is from yesterday, and it's just sitting on that lower trend line. Well, one thing that I think is going to be important to watch is the RSI down on this lower portion of the chart. There's a pink dashed line there, and that RSI is just sitting at those lows. So if Amazon were to have a breakout to the downside, that RSI most likely is going to break that support, and that would help to confirm a downside break. And then conversely, on the upside, if Amazon were to break to the upside, then you can see where those last little highs on the RSI are. Then you would want to see that RSI turn up with that breakout and start to show some strength. Okay, so now the next slides that we're going to look at are also from the February 17th, your daily five. And so I thought I would follow up on these as well. So advanced micro devices, AMD is the symbol. And I'd walked through, this is the chart that was presented February 17th. And I walked through a couple of patterns here. There were two what are called butterfly cell patterns. The first one is over here on the left, and you can see it got a nice move to the downside from that pattern. And then over the next few months, it formed another butterfly cell pattern up here, just below the $100 range. And then as of February 17th, it had had some correction to the downside. So let's look now at the next chart. So the next chart presented on February 17th was of AMD and a potential of where some of this correction may go to. And so there was A, B, C, D buy pattern, and that's marked in A, B, C, and D. And sometimes these extensions down here of this pattern can come into play. And on the next chart, I'll talk a little bit more about that. And then it just walked through some of these extensions. If this green dashed line, the support area, were to be broken. So let's go now to the next chart and update AMD. So there's two different patterns now. Now we have the daily, the butterfly cell patterns that are playing out, and here's the ABCD that was projected from February 12th. And so the price did get right down to that decompletion on the pattern at this 0.786. But there's a couple things that I want to update you on this particular pattern and this ABCD buy pattern. So you can see it completed right there, and it's gotten a corrective move here to the upside. If we were to look at the Fibonacci retracement from the C to D leg, the price correcting up came to just about the 0.50. And if we were to take a Fibonacci retracement from the A to D up to this point, that's a 0.382. So we found some confluence, some resistance area here. Well, another thing that's worth studying on this chart is the symmetry. And symmetry is an important element in these particular patterns. So let me show you an example. So this A to B leg right here, this also has an A, a B, a C, a D buy pattern. And you can see the move that price got once that pattern completed and turned to the upside. Well, there's quite a few bars in from A to B on the new larger pattern now. I think I counted about 14, 15 bars. It doesn't have to be exact when you're looking at this. But the thing to note on it is that from the C to D leg there's only about 6 bars. So that is a form of asymmetry. And so sometimes what happens when you have an asymmetrical CD leg to your AB leg is that sometimes more time is needed for the pattern to fill out, and that can occur in a couple of ways. But first, let me show you a simple method to find that time symmetry element. So you can see the A to B leg. So I drew a vertical line up from where that B leg completed. And then from the start of A, I just connected that. So this horizontal line represents the amount of time that A to B took to form. And then I just cloned this line and I dropped it over to where the C leg started, dropped it down, cloned the timeline here and dropped it over. So you can see right here that this has potentially more time to fill out and fill in that symmetry. So sometimes the price, in order to do that, well, it'll stay around here and maybe just range, or it can also move down further to potentially one of these extensions, like down to the 1.27 extension, maybe closer to this support area. And sometimes even they'll extend down to those 1.618s. So here's a really simple way that you can, look at some symmetry of these patterns. And then, of course, these can go more into depth. This can be an extension, etc. But I think this is a good example with the, 14 bars here and 6 bars here. And so we'll keep an eye keep an eye on this and see how this pattern plays out. So if you'd like to learn more about these patterns and how to learn them for yourself, here's a link that you can follow that goes to a course that I have up on Udemy, and it's a 12-hour course on demand, and it gives you lifetime access. So I hope you'll check that out. So thanks for joining me. Thanks for watching today, and I'll see you on the next Daily 5.